All right, folks, here we are on Trading Up. We've got Chris Williams in the house, aka Swaggy C. We've just done an awesome podcast, and trust me, guys, you got to listen to this. Please, you have to go and listen to it. There's a link underneath the video here. It's top drawer, but now he's actually going to walk us through one of his recent trades and show us how it all works on a chart. So, welcome to the show again.
Thanks a lot, bro. I'm looking forward to it. Can I share my score right now?
Yeah, go for it. As you'll know, as a trader, one of the biggest issues can be coming up with enough capital to make it worthwhile. Well, the good news is my sponsor, City Traders Imperium, have solved this problem for you. Their day trading and swing trading funding programs mean you can trade between 10,000 and 4 million in capital with up to 100% profit share. Yes, you get everything you make on the account. Plus, the folks at CTI have made it super stress-free, allowing you up to 6 months to pass the funding challenge, which means if life gets in the way, you can park things for a while and stick to your trading plan. To check them out, click the link in the description below or in the card above.
First of all, this is my neighborhood, in case anybody knows, in Puerto Rico. That's first of all. Second of all, this is my overall chart. So this is AUD USD, and I like to keep everything the same. I don't know how other traders do it, but I don't like deleting certain things like from my chart, unless it's like way far in the past. But you see right here how I'm on a 4-hour time frame. I said on the podcast, I stick between the 2-hour, the 4-hour, and the daily. These are like my babies I like to stick between. Now the daily kind of looks a little bit scrambled right now, so we're going to walk you through a trade that I did last week. So for me, I had this uptrend coming all the way up. I didn't buy it at all. I was trading GBP AUD and gold, a month prior. But you got to understand, I am a swing trader. I'm looking to hold things for a week, a few days at a time, maybe even 2 weeks. Once price broke this, and this is one of your questions on the sheet. I don't think we even got into it, but you were asking, what is your favorite entry? And for me, my favorite entry is the break of a trend line always, because for me, it is so easy. The market likes to do the same thing over and over again when you break the trend line. If the market goes A, B, C, D in terms of touches, it'll break those exact touches going up, D, C, B, A, and going all the way back down if that's a downtrend. So for me, for the most part, once the market gave me this lower high right here, came down, gave us another lower high right here, even though this is a little bit higher than this one, in comparison to this, I drew this trend line right here. Price came down, came up. For me, I didn't want to get in because price could have easily just faked me out. You see how if you look really closely at the time, it's easy to look back in hindsight, right? At the time, this could have been a higher low right here. If you look at it right here, right? This could have been a higher low. So I didn't want to actually get in until price actually broke this low, which is why I had this black box here. Once it broke this low, I was fully in. I was fully in with a stop loss way up here. And I'm going to show you where my stop loss was. I had a stealth stop, pending this break, had my stop loss, right above this last high, which was this one right here. Not this one for the most part, but most of this part. Try to keep it as tight as possible. And my take profit was 0.70 over here, which was a 1 to 1.5 risk reward ratio, which I don't really like too much for the most part, but that was my first take profit. My second one, and people got to understand that I'm more of a quarters level person. I go from 0.72500 to 0.70 to 0.67500. So I had my first take profit here. My second take profit was actually way down here. And it never actually fulfilled there until it got to right here. I'm going to talk about the whole trade and as time goes on. So once price came down, what people don't understand is that I actually held this over the weekend. So on the 9th, the 10th, and then the 12th, right? So I held this over the weekend. As the market opened back up, it didn't even come up. It didn't gap. It didn't do nothing. It just came straight back down, which I thought it was going to do. It came here. I took my first take profit, which was getting into partial profit. And then price continued down, which I expected it to do. Because why? Because it broke the trend line. This was our trend line, right? A, B, C, D. And like I said earlier, if you look at this and input it in your strategy, what the market likes to do, and go back and test any single trend line you want to, 9 times out of 10, you'll see how it works. When it breaks a trend line, it's a valid break. It'll break D, C, B, A. It'll get just as low as the points it made. So for me, this was my first take profit, but I knew at the end of the day, like it was going to get at least this low, But me, I wanted to be greedy and get to 0.67500 because I like to trade in like quarter levels and things of that nature. Once price got here, I saw it pulled back up. I didn't get out until 69,500. That was my exit because price came up. If I can delete this for a second, once price got here and it came up, I thought it was just a simple retrace and it could continue all the way back down to 67,500. But it took this out. it took this out right here. And I'm on a Heikin Ashi candle right now. If I go back to the actual candlesticks right now, it took this out and it was a major candlestick that blew right above it. So I was like, okay, clearly like we may be reversing. Let me just close out. So I closed out that first trade. But let me go back to Heikin Ashi. And for the most part, people don't understand this with Heikin Ashi, but I'm a swing trader. Heikin Ashi takes away all the clutter that you get from regular candlesticks. For example, you won't see a red candle, then a green candle, then a red, then a green, then a red, then a green with a Heikin Ashi. You'll see that on regular candlesticks. With Heikin Ashi, if it does red, green on regular candlesticks, but it's still heading down for the most part, you will just see 6 red candles because it takes away that clutter. So for me, I use the Heikin Ashi a lot when I'm trading because I like to hold for a long-term position. Now, after that, I didn't get in AUD at all. Once it came back up, I let it do what it wants to do. I didn't get back into AUD USD until it got to 6,900, which was this trade right here, which is the one that I made $8,000 with last week. I put it on my YouTube channel. If you go look at the YouTube video, it's the video right before the day in the life is what I think I said, here's how I made 15,000, day trading Forex, that video. And I did this video right here alone. Knowing this is where you got to pay attention to the market structure and how big these candlesticks are. Once the candlesticks got lower and lower and lower and lower and lower, I'm looking at it like, okay, I'm looking at AUD USD and I'm looking at it from a Fibonacci perspective. I'm looking at A, and then I'm looking at B, I'm looking at C to 50 extension, then I'm looking at D to be right here, which is where price went to. So I'm looking at this, like if I go back in time, obviously, like I said, it's hindsight, but at that time, price is right here and it's getting lower and lower and lower and lower. And I was able to get in and draw this trend line from A to B. If I can get this trend line right. It's not this one, it's the other one. I'm too close to the end. Right there. I had this trend line right here. This is getting super low. Why is this candlestick getting super low? If you want to draw another Fibonacci, I like to play with Fibonacci a lot as well. You can do one from over here as well. A, B, C, and then come down for D. The confluence is lined up. So me, for the most part, I'm looking at this candlestick getting lower and lower, and we're still in a downtrend. Remember what I said on the podcast, that I'm a swing trader. If I know it's a downtrend long-term, I'm looking at every single reason to get in for a downtrend. So getting in, me, for the most part, and I'll end it in like maybe 2 more minutes. Me, for the most part, I would consider this trade super risky because I like to be more better because I would want to wait for, like I did up here. Like up here, I waited for the breakout and to take this low out. Over here, I didn't do that. Once I saw this candle do this and it made a doji and it was coming down, I got in. I didn't wait for the break because I saw how lower the candles get. I knew this wasn't no triple bottom. This wasn't a triple bottom to me. Like it wasn't like it's coming down, coming up, coming down, matching the high and got this big consolidation. If I go to GBP AUD for a second, there is a big consolidation on GBP AUD. If I can just go back in time on a daily time frame. Like it wasn't like the market's doing this where it's like up, down, up, down, up. It's not doing that. On AUD USD, it is flat out and clearly the candlesticks are just getting lower and lower and lower and lower. So knowing that, I took the risk and jumped in a little bit early, which was fine because I wasn't in drawdown, had my stop loss above here, had my take profit down here, and I got in and I was profitable with that trade. And I put that trade on my YouTube channel as well. And then once price got to right here, again, you didn't know to just get out. You know what I mean? Like, 'cause you don't know. You only know to get out if it either hits your take profit or it hits your 27 extension or it starts to reverse. For me, it was super close to the 27 extension, which is right here, the long-term extension. If I look at it from a B, C perspective, I was like, okay, this is basically the 27 extension, but I still feel like it can get lower. But price kept going up and started going up. So I just closed out at about 68,200 for the most part with this trade. Price is coming back down. I didn't get in this trade at all. I got in gold. Gold was the second trade that I made a lot of money on last week. And I'll have to do this really, really fast. Gold, you have to understand how your peers move. I talked about this on the podcast as well. With gold, this was one of the better risk reward ratios I had last week because I looked at gold. Sorry, I went to a 2-hour time frame instead. I should have stayed on the daily. But gold had this consolidation as well. But gold is not going to operate the same way GBP AUD operates in consolidation. It's not going to break the consolidation and then retest and continue. And I want you to go back in time and back test this. Every time gold breaks a level, it is going to just go. Like, get a sell stop, get a buy stop. It's not coming back to retest. So I put this on my live trading lab, and I hope I can just clip this segment and just send you the 20-second segment. I'm telling all my students, yo, put a sell stop at 1775. It is going down to 1720. I said 1720. It went to 1730. It is what it is. But I said put a sell stop at 1775. And I still have it here as well. 1 to 3.88, basically 1 to 4 risk reward ratio, which is way better than some of the other ones. But it's in line. Like I told you, my risk reward ratio is 1 to 2.92 based on Forex.com telling the analytics. Neither here nor there. With this trade in particular with gold, I said the minute it breaks this big box, it is heading all the way down. This is the second gold trade I placed, but what I deleted already was the first one, which was way up here. And gold was way up here. And the minute it broke below, I said, get a sell stop at 1775. It came down. I had a sell stop and it came all the way down. Now, my take profit was 1720. Why? Because I like to look at what price did in the past. 1720 is a major psychological area for gold from based on what studying the pair. I only trade a select few pairs, so I'm very, very familiar in particular. So I know if I go back in time, I know gold stops at 1720 a lot. A lot of times 1700, but 1720 as well. So me breaking 1775, coming down all those pips, I knew it was going to it wasn't going to stop at like 1740, 1750. It was coming all the way down to 1720. And mark my words, like this podcast can be released next week and you can go and see it. If it breaks below this level, it is going to 1700 and may even go a little bit lower. If it does that, there's a big chance that it can just reverse up and just retrace. But if it breaks below, it's going to 1700 and potentially 1675. And those are the trades I made last week. I did lose one time on gold last week because I jumped in too early, and then I won the next two on gold, and I won AUD USD. I didn't make the videos on gold on YouTube, but I made the AUD USD videos, so people can feel free to go watch those videos on YouTube.
Awesome. Brilliant. All right, guys, just jumping in here to save you a bit of time, jumping into a gold chart. So this is gold. What did he say? So we're at this line here, which is the 1717 line there or thereabouts. So if it breaks below, it's definitely going to go to 1700, which it did. That's your 17. Sorry, that's not your 1700. That's your 1700 line there, so it got to that. And then he said if it even breaks further than that, you might get to 1665, which... This line, actually, sorry, I've drawn that one wrong as well, is down here. So didn't quite get there. Obviously got stopped at 1680, but pretty good prediction. All right, let's wrap this up. Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description. That's fantastic. Awesome breakdown of not just one trade, but three. So thank you very much, Chris. Now, what's the best way for the guys to get hold of you?
They can get a hold of me on Instagram, Swaggy CTV. They can get a hold of me on Twitter, Swaggy CTV, YouTube, the Swag Academy. I literally have a free course on my YouTube channel, like one of the craziest channels out in terms of actual course material, just like you have it in terms of podcasts. But if you actually want to trade with me and see me trade live every single day, for the most part as a swing trader, like every single day, www.livetradinglab.com. That is where I'll be trading live. Me and other traders will be trading live and broadcasting it live for everybody to see.
Awesome. Well, look, guys, what we're going to do is put a link right under this video here, so make sure you smash that. All those links he's just mentioned are going to be in there along with the podcast that we shot, so please go and check that out after watching this. And do remember, hit subscribe, click on the like button, and click on that notifications bell. Click all, and we'll see you in the next video.